All right, greetings everyone. I'm going to go on ahead and review the M1 Finance My Roth IRA. I have not done a M1 Finance review in about 2 months, so it's been quite a while since I've actually looked into my retirement savings. And I can admit, guys, look, I have been neglecting this. I'm doing really well. I mean, I'm up $277. 30%. That is absolutely beating. I think that's beating the Dow Jones. I actually think it's beating the Nasdaq. It's beating my Robinhood portfolio by far. But this is a small portfolio, and again, this is a Roth IRA, so tax-free sheltered income where I can put stocks into the Roth IRA, and I won't be taxed. So I like I said, I mentioned this before in the previous videos, or at least the last M1 Finance video that I had made, that I need to start focusing on the Roth IRA. I've been neglecting this. It's doing very well, but again, so I mentioned this in the Robinhood video, that how I don't want to buy into the high here right now. The Dow futures are up some 300 points or something like that. So the markets looking like the markets will do well tomorrow. I don't go by the futures or anything because overnight those could go back. The futures can dip back into the red, but right now, a lot of overvalued stocks. There's a lot of overvalued stocks, and it's hard. It's really hard to find valuation in this market right now because so many technology stocks are overvalued. A lot of the consumer staple stocks are overvalued. Discretionary overvalued. There's a lot of sectors that are doing so well, and I'm just kind of waiting. I'm kind of picking my spots here. Let's review the portfolio, guys. You guys already saw that I'm up 30%. So Activision Blizzard killing it. I am up $20 with Activision Blizzard, 24%. It's a great gaming stock. I wanted to put them into the Roth IRA, and I thought about putting Take-Two Interactive into the Roth IRA, but the fact with Take-Two Interactive, they don't pay any dividends, and I wish they did, so because I will put them into the portfolio. Microsoft doing very well, 13%, Intel 11%, and IBM 5%. So the technology portfolio as a whole up 13%, $45. Very, very good to see that the technology portfolio is doing well. So I have not looked at this in quite some time. Healthcare is not doing well right now. I've said this in the Robinhood portfolio video that healthcare is, they're lagging as of late. Merck and Company up 6%, excuse me, 7%. I'm up $6 on them. Abbott Laboratories, I'm up 4%. United Healthcare Group, that's a very surprising dip, down 3%. Very surprised to see that they have gone down. And CVS Health Corporation, I actually bought CVS Health Corporation and put them into the portfolio, guys, because I'm a big believer in Aetna. I definitely think that was a really smart move for CVS to buy Aetna. And I look at Walgreens, and I think Walgreens is going to be the biggest loser here. They need something to hang their hat onto. Target has been doing very well. It's been dominating the market. Target and Walmart have both been doing very well. Costco has been crushing it. And these little small retailers and pharmaceutical retailers like Walgreens and CVS, they are not doing well right now. And CVS, at least they have Aetna that they can hold their hat on, but Walgreens doesn't have. They don't have a lot of the pedigree of having them boost up their stock. So they need something that can generate some more income. They need something that can push the stock forward for the foreseeable future. But anyway, healthcare has been dragging. I am down $8, 2% on healthcare. Very surprising to see there. Consumer discretionary. Let's review the portfolio here. This is some sort of pie chart. $21, 13%. Starbucks. They recently had a weak forecast guidance for 2020. I think something came out today and the stock tanked. So I'm up $7 on them. I'm still doing very, very well with Starbucks. Home Depot, you guys know about Hurricane Dorian. So that stock is absolutely just shot up thanks to those hurricane sales, and I'm reaping the benefits off them. The stock is up 10%, at least it's up 10% in my pie chart. Walmart, I'm up 9%, $3, and Costco wholesale, I'm up 8% on Costco. So you guys can see some of the overvalued plays like the Home Depots, the Walmarts, the Costco's. I did put them in as my discretionary for the long term hold here. Put them in the Roth IRA, and it's doing very well, up 13%. So consumer discretionary, they're not playing around. They're doing very well. Industrials and aerospace, up $18 on them, 11%. Quite surprising to see because with the whole trade war news, industrials are the ones that's getting hit the hardest. Or aerospace getting hit, but UPS up 26%, killing it with UPS. A.O. Smith Corporation, up 10%. I like them a lot. I like the water companies. I've said that before. Boeing up 11%. Good to see. Lockheed Martin, I'm up 2% on Lockheed Martin. So there may be a few slight changes in the portfolio that I have done, in comparison to the previous portfolio, but I think these changes are good. I like what I'm seeing here. Coca-Cola up 12%. They're overvalued, but I continue to hold them. Colgate, a little bit overvalued with them. I'm up 6%. General Mills crushing it with 7%, $3. That's good to see there. And Campbell's Soup, I'm up $2, up 7% on them. So this is a very, very good consumer staples or consumer goods pie, and it's doing very well. It's up 8%, almost closer to 10%. So. Real estate up $10, 6% on them. LTC Properties, I am up 13%, $5 on them. Iron Mountain, which I actually have a lot of income and equity into Iron Mountain in my Robinhood portfolio. I am also up on them on my Roth, 11%. Store Capital, a very, very good real estate investment trust. I like Store Capital a lot. I like their portfolio. Up 6% on them. In Public Storage, I'm up 2%. So real estate, real estate was doing bad. If I can remember the last video that I made, they weren't doing super hot, and I made some adjustments, and it looks like those adjustments are working out. So let's take a look at some more stuff in the portfolio here. Finance, Visa is up 13%. You guys know I bought that Visa contract. That did not go very well, but I do have them in the Roth IRA, and it's doing very well with 13%. Main Street Capital, monthly dividends up 9% on them. JP Morgan Chase up 1%, and Bank of America is down 0.80%. So that's a recent stock I bought into the portfolio, but very good to see there. See about the dividends. Earned dividends, I got $1 from finance. Real estate, let's take a look at their dividends. That's something I was not doing here. $1 from real estate, so it looks like the dividends are starting to kick in a little bit. Consumer goods, let's take a look at their dividends, 128. So not bad. The dividends are, I know this is a small portfolio, and I know that unless I put some really, really high paying stocks that pay dividends, I'm not going to get a lot of them. 134 in dividends for industrials and aerospace. That's pretty good. Consumer discretionary. I don't expect the dividend to be high with them, but I got to take a look here. 121. That's not bad. Yeah, it's pretty good. That's pretty good to see. And utilities, gas, and telecom. So this is a new sort of combination that I've done with the portfolio. This is 3 sectors into one pie chart. Dominion Energy up 6%. Good to see. AT&T, I actually have a little bit of them in the Robinhood portfolio. Up 3%. Verizon 5%, and ExxonMobil down 3%. So this is what I was talking about in the Robinhood video about energy stocks being in a bear market. It's a bear market. It's time to buy. And I look at Blood Industries and hopping right on in with Shell. I think in the Robinhood portfolio I had 50 shares of Shell, and that's I think $47 quarterly. But ExxonMobil not doing good here. It's down 3%, and I might have to buy some more of this because it's on sale. So that's it for the portfolio, guys. My portfolio has, you guys already know I changed it up so it can be allocated to market sector, technology, healthcare, consumer discretionary, industrials and aerospace, consumer goods, real estate, finance, and utilities, gas, and telecom. So I believe that hits all the markets. I might throw some gold, I might throw some gold in here. I'm not really sure if I'm going to do that. The portfolio's doing well. I mean, it's up 30%. That's crushing it. So let's take a look at some other stats. Net cash flow of $1,000. I put $1,000 in around, let's see, think it was around the summer. I don't even remember when I put that $1,000, but you can see the portfolio shot straight up when I did that. Dividends. That is the most important thing I'm looking at. So $70 worth of dividends. That's phenomenal. You know, it went up to $70, and oh, it looks like it dripped. It's only cash balance, only 1 cent. So I had $8 into the portfolio that was actually my cash balance, and now it's 1%. It's 1 penny. So it must have dripped back $10 into the portfolio. That's what I like about M1 Finance, because the computers really manage your portfolio. It dripped $10 back into the portfolio, and I guess that's the reason why my return went up and went up to 30%. It's killing, just straight killing the market right now. But yeah, guys, you guys can see my stats here, and I guess this is going to be a short video. The M1 Finance videos are not very long. I keep it short and simple. Let's take a look at the dividend yield for this portfolio. I'm quite curious as to, 291. So that's not bad. It's around that 3%, and this is like having a ETF without the expense ratio and the expense fees. So yeah, that's good to see. There's not really much to talk about my portfolio. $277.32, up 30%. Let me know what you guys think, and have a great day. See you guys later.